So we had all of the accumulation here, the push. This one happened, accumulation, push, accumulation, push. So I don't know. Looks like this place, if ever price decides to come down, maybe 10 years later or 5 years later, I don't know. Price will have to take this place as liquidity. At least this place to take it as liquidity. This whole place was a range. We are just accumulating, and then this was where the leg began to make sense. All of this accumulation now, the manipulation that occurred was this one. Just manipulated here, and then you can see the little accumulation that was happening here. This was the major accumulation, this was the sub accumulation. So they just bought small accumulation, bought small accumulation, and then all of the accumulation that they be accumulating here was manifested with this. So looking at this range, this is we are in premium here, it's not discount. The price had to come into here to be able to continue the movement using this time frame. Yeah, so that was what happened. You look at yourself, you see where the demand was. Yeah, it was this one. This guy really is strong. Strong. Price is this one as entirely liquidity. You did? You didn't even use it. Didn't use it. Just tap into this kind of and continue. Did this one take this one side? You didn't take it. Okay. Yes, there was
So
someone.
that means that one.
Yes. I tapped into this one, but I didn't fully even tap it. Just tap into this area. Then the next thing it did was become the master of demand. We had this, we had this, we had this. Price continued like that. Took all of this liquidity and then price came, tapped into this place. This place. Then price began to go up from there. This was the one that did the sweep. There was demand here. Sometimes when you see price pointing like this, a good number of times it's telling you that there's demand in this area. So when it now goes into the area and sells into the area and then it goes back up, then the new area of demand is now this area. So that was what price did. This one became inducement. That was what price did. So price came into here and then began to buy. So all of that accumulation, pattern accumulation, manipulation, sell, buy, manipulation, sell, all of this accumulation here, and then we bought. So third again, bought, third, bought. It's usually good to do TDA whenever you're even thinking of getting into a position at any time. Just do your thumb analysis. So this one, all of this price came here, tapped into here. Then we took this as internal liquidity. What's gonna happen? So it's as if this peer uses things like this as demand zone. Because that one that started the move around here, that was the same way you did it. This one. She used this one as demand. That's peculiar. So for this pair, if we see something like that, then that means price is going away for a long time. So touched into here, touched into here, and then we bought this one internal liquidity, go up there, price came, swept it, tapped into here, then up, continue going. It continue to go up.
So, sir, one
This
question.
was internal liquidity.
One question
Okay.
about your education. I am learning not to notice that you are not an actor.
Yeah.
So, when you show the way they normally take the man. There's a pointer there. So I think this is an aggressive method.
This one.
Yes, this possible. Yes,
This one
yes, sir.
doesn't look aggressive. It's pattern.
Is that not aggressive?
It's not aggressive. Do you see the internal liquidity? Now look at this. You see that when price was moving here, there was a heavy buy here, and then that was when there was a sell. There was a heavy buy. Price bought into here, and then there was a sell downward here. Somebody was gatekeeping this area, so they bought, and then another buy, and then a little sell, another buy, and then this one there was a sell here, and then price bought. Normally you feel like okay with all of this liquidity hanging here, that price should come here and then tap into here for continuation, but there was heavy demand, so they bought. Then somebody tried to sell, took profits, they bought, and then the continuation, this one kept going, and then price retested this one. So by the time price was going to open again, it opened like this. There was a sell, there was a buy. Now see this gap. This one did not mitigate this one properly, and then we bought. Somebody tried to sell again, and then this one came again and tried to sell, and then we bought again. Now see, you see that this one was not fully mitigated again, but this one now came and tried to mitigate it.
Yes.
So, but did not fully mitigate it. So by the time we are going to come back the next time, you see that when price came back into it, it used this one as inducement, and then we came and tap into here. Just to continue. And by experience, we know that whenever we see a formation like this on this pair, that means that price is about to buy for a long time. You know, I showed you the example in that previous place. You see that when price tapped into that place, it never came back to that area again. So here now, this was what we saw. So that is what is expected. It's not an aggressive entry really. Because price has already given us a hint with this one tapping into here to tell us that okay, there's demand here. And the heaviness of the demand caused that when this one did not even fully tap enough, it already bought. And then it went here, took out this eye. This one was looking like internal liquidity, or sorry, like inducement. And then price even came into it, tapped into here as if there was full demand there, and then reacted. So the fact that this one was carrying some amount of demand showed us that there is heavy demand in this area, because once it didn't even touch it fully, and it's already acting the position of demand. It even gave inducement after taking out this eye. And then price even came and reacted from it. So by the time price was going to come back, all it needed to do was just come into this area where the real demand is, and then the buy continues. Every buy. So that was it. That was it.
So if you were to take an entry,
Yeah.
I thought you wait for this next road
This one.
that we are on now.
Or this one. This one.
This is yet to play.
It's not bad to wait for it too. Not bad to wait for it too. But whenever you understand candle behaviors, the psychology behind it, it gets easier. So that's how you see this one. But this one too is not bad, because why, we've been able to, there was some accumulation here they bought, and then this one they not fully mitigate, but we know that in this kind of situation, price does not really need to mitigate, because it's already taken out the supply that was here. So this candle just opened from here, and then sold into here. So this one, the sell that was supposed to happen here, this is how you know that this candle does not need to mitigate again, because this particular one, by the time they sold here, there was not enough volume from the sellers, because the buyers, they were very aggressive. So this one, there was not enough sell, so they bought it, and the next candle just opened from there. Do you see the volume, that the sell volume that was on this candle? It was not much. So all of the sales that they were trying to sell, it should have been aggressive to show us that okay, there's enough sellers to tell us that okay, they might have to come here before they can find demand. But it was not. So price just continued as if there was nothing. So that was to tell us that this thing was full demand. So that there was full demand there. So by the time price came, use this one as inducement, and then it came into it and the buy continues. So this one was the inducement that price used. You get.
Yes, sir.
So we wanted to use this one as the mantle, it wouldn't that be bad. Or as an entry. It wouldn't that be bad. Just have had to wait a while. So it doesn't matter though. So eyes went like this, went like this, went like this. Then we came tap into it and off we go. So this one tap into here. Summation. Price are not come back here again. I said price didn't come back there again as demand. We just came to take it out. So because one thing we can see here, all of this one is liquidity. All of this is liquidity. From what we can see, price just tapped into demand and then did a second tap, and then continued, entered the little supply, reacted from it, and then it went here, tapped into this. One thing about UJ is that sometimes it might not give you the exemplary kind of demand you are looking for. But once you start to like understand how the candle was formed, it will give you an understanding. So there was a little supply here, they were selling, 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 and then they bought, and the price mitigated here. There was a little indecision. Then this one tapped here, we had this candle. Then by the time this one bought from here, we can know that this one was enough demand for price to react from. Because the indecision here was cancelled by this candle that opened. So if there was going to be a sell, the next candle that would have followed this indecision candle would have been a sell candle. But we can see that the next thing that followed was a buy candle, and then the next candle just tapped into it and kept on going like there was nothing. So and it went really, really high. So by the time price came back, that tap into it and continuation. So we see that with what price did here, tap into here, went up there. The rejection was from here. Somebody was taking every profit. I guess it must have been one of these guys here. See the sharp sell and the buy from here. So they were helping him buy the position, and then when price got here, try to buy again and then just to profit. Next, see this happen. Further trials to buy. But this was not enough volume really to continue the buy. There's not enough volume. They just tapped into here and then the sell continued. And entry will be here. Entry will be here. So just sold off. And then we see this. Then this candle retest and then sells down. So this one was already demand. Was already supply, sorry. Because why? We've been able to take out all of the attempts by these guys here to sell. You see that as they were selling, somebody was buying. As they sold, somebody bought. As they sold again, somebody bought. But this time, the person that bought didn't even have enough demand, enough volume to be able to hold the position and take the price higher. So went into this supply, and then the next thing that happened, boom, just sold. So this candle just told us that okay, we are on a sell. So the next thing that happened was price retested it. So this candle retested it, and then a sell. The next thing you should expect is a retest of this candle. So I just sold from there straight away. And then we see a pullback into here. Somebody tried to buy, they failed. Tried to buy again, they failed, and then the sell continued like nothing ever happened. So all of these accumulation, attempt to buy again, failure, sell down, okay, demand is holding, and then the accumulation and the bought volume that was here was quite impressive, but anything could happen at any minute. But we are bullish around here. It's obvious we are bullish around here because all of this has happened. There has been several accumulation and demand has been doing. We've been able to take out the level that was here. Whatever sell supply limit order that they had here, we're able to overcome it. So the next candle that was going to be the area of demand was here. Because why? We've been able to break it. And this one retested and continued the buy. So when price came back, came into here, then we continued. So went up, tapped into here, continued the buy, and all of that. With all of this liquidity, you would have expected a pullback. So price pulled back, put back into here. And then we bought. This one was demand, but some sweat, internal liquidity into here. This particular candle. Yeah. You know why this particular candle was demand? This one.
Okay.
This
So
candle.
can you zoom? I can see what are the left. That's why it's demand, because we have supply acceptance and supply response
Yeah.
that has been consistent. So we have this next demand on that.
Okay. Yeah, it's broke the supply. And one thing we see is that all of these sales, all of these sales, all of these sales, all of these sales. Despite all of these sales, there was accumulation ongoing. What it was accumulating, this was not the manipulation. And then by the time price opened, so opened like this one sold down, there was a buy, and then the next candle, this one broke through the whole thing. This particular candle just broke through the whole thing, and there was an attempt to retest. So it wasn't fully done because we needed to come to this area. So when price come back, we had this one as inducement. This was another pointer to the demand that was there. So price just came there, tapped into it. The continuation of course. So there are some times that you see candles, like two of them. One will break and the next one will continue, and then price will now try to mitigate this one that is here. So let's say that there are two. Okay.
So which of them break? Which of them break?
There will be one candle that did this break. Then another one will now open here. You get? Another one will now open here. Let's say that this candle is divided into two. One opens and closes here. Another one opens and closes here. Do you get?
Okay.
So this one that broke will now be like this. Probably there will now be one kind of gap inside. So as this one now opens, there will now be some retest. Let's say that this one did not even touch down fully on this candle. If you are not careful, you now think that this candle is still holding demand. But it was not the one that broke. It's only on gold that something like that might exist, that okay, price will now use this candle as demand and just continue like nothing happened. So, but on most pairs, it will have to come to the candle that did the break, because that's where the order was placed and that's where the mind of people were changed. Sorry, give me a minute.
Right.
So, do you get that?
Yes, and then another question, when you want
Yeah.
like I think this is the one
Yeah, this is the day. But it looks like
4 hours.
the water.
Not do that break properly.
Yeah, we'll go to 4 hours. What day was this? 6th May 24.
That's the essence of refining.
Yeah. The daily candle is like very close to lower time frame kind of price action. You go to monthly and all of that, it might not be so clear. 6th May, yeah, 24. Yeah, this is it. You see that it's still practically what we have. See all of the accumulation that was happening here. That then that this happen. So this candle, the one that broke, particular one. If you just refine it, you can refine it and like that. And we did not even fully mitigate it. That was what I was saying. This was exactly what I was saying. You see it? This candle was one that broke. But this one continued. Open like this. And whenever price open like this, I've seen this kind of PA before. There will always be a gap here. So this one will open and then price began to mitigate it like, okay, it's the one that has demand. And just kept on going like nothing happened. See that? But we know that the one that broke is the one that has the demand. So by the time price came into it, just tap there and then continuation occurred. See that? We just continued the buy. That's what happened there. Just continue to buy. Yeah, this move back, now pull back. This thing is overvalued. Whenever there's overvaluation, investors will start to get nervous and they start to sell. Very much overvalued.
Buying.
You see all of this? Whenever I start to see this bending something, price bending like this, you know that investors are already calculating that this thing is overvalued. We need to sell.
Bending aside.
Do you see
That
this? See all of this? He just did like this. Came here, did this. Came here, did this. You know that normal price action should be like, okay, we just, we go like this and then we go like this. And then we go like this. But when it starts to do all of this cough, you know that it's already overvalued. You get what I'm saying? All of this cough, this one will look like as if they are accumulating. But there's no accumulation going on there. And people are getting tired. Don't you ever see it? So there will be a pullback. Normally, some people will sell from here. People will sell from here. Continue again, continue again, continue again. Somebody will come and sell again. So this was the one that was going to break the camel's back because it was too long. So by the time price just came here, tap there, this one will be like internal liquidity. Price will just go here. It didn't take the eye. So next thing is just tap into here and then sell. Boom. See the sell. Price continues the sell. Just continue selling. Just continue selling, 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 selling. Somebody was attempting to buy here. So I guess there was one information that they had. And then they started buying, buying, buying. So buyers are now getting enormous because there was now short buys here. By the time they were able to take this one out, another buy. See that we were able to sweep this. Price went up here. We were able to break the little supply that was here. Went up here. And then we did this. Price used this one as inducement. Tapped into here. This would have been a good entry. So price bought from there. We sold down. We should expect that price to take this out. So price went up, went up, went up, did this. And so when price came back, we used this as inducement and then tapped into this candle. You know why we would have used this place? Why price used this one as inducement?
Because of the sweep, relation and sweep.
Yeah, we've swept. Price did not even fully touch into demand, and we just went here and continued like nothing happened. So price has to come, tap into the real demand, and then we continue. So what was happening, and then we kept buying, kept buying. There's no way price will not come and sweep this one. So people are already getting tired of see it. All of this, all of this. Unless somebody now comes in and decide that no, I want to buy full and heavy. That's when you now see one candle, one very fat candle that will just move from up to this place. And then everybody else will now follow. Now start to buy, they now start to buy, they now start to buy, they now start.
So that's psychology.
Yeah.
True.
So that usually happens on US 30, sha. So I guess this one was not feeling the same way. It was too overvalued for them. Then they sold down, took some of that liquidity. It's not complete yet. I still even take this one. But then go on ahead, they buy, they buy. They get tired here. Some entry was here. There was an entry here. So we had all of this buy. We're able to take out this eye. Price swept again. My price is beginning to do like this. All of these small, small sweeps. And then something is about to happen. Swept here, swept here. This one to open, swept here. Okay, now the drop. So the next thing is to expect that okay, price is going to pull back into here. Sure that if we go on lower time frame, we'll find a very, very good candle that will do that. But we had all of the buys and sells happen here, and then this one sold. So wow, this would be an entry. Just touch into there and then sell. Just sell freely. That's the good thing about UJ. You can sell freely when you've detected that okay, investors are already getting tired. So they just sold, sold. Hold this for days. Just sell and sell and sell. Take some of the liquidity off. Some of the liquidity. In fact, this would be my target. This will be my target. But this one is like internal liquidity. This will be my target. But this will be my target. The price took it and then somebody started to buy. There was not enough and then it sold off again. Now price will want to come for this. Now I will start buying. So they sold down. See the continual buy. Nobody was accumulating on some people. Were accumulating, they swept this low and they were able to take this high, pull back into here. Then accumulation, manipulation, took this out. Next thing expected retest. I remember this trade though. I remember this trade.
Okay.
Remember this trade. That was when I saw this. I'd be like, oh wow, this should be a good entry. People are looking at it, it's a sell now. I said, no, you people don't know what you are saying. It's not a sell. Those accumulation are occurring in it's not a sell. Whenever I just went here, manipulated that, manipulated here first, safe. Manipulated here first, then went up here, and then a kind of small supply, and then we had to sell back into where the demand started from. And this candle was the one holding it because why we've been able to buy heavy. Somebody came here. All of these ones they were selling. This one sold down every year. Then there were little buys. But there was still little sell. But sellers were already getting tired because they don't have enough volume to do it. So when they sold finally, this was their exhaustion. They sold finally, and this person just bought it heavy. Now see how far the candle went, all the way from here to here. So you know that smart money is in the market. Now all of this one we are trying to retest. They were trying to further sell and all of that, and then they were not able to sell, and then they continued. So by the time price came back into this person's limit order, and the buy continued. That was a very good trade. So if you just continue buying. That was when I was still trading UJ before I left it, sha. This was September
So,
now.
sir, where do you take your entry?
This candle now,
What's your entry on that?
this candle. Because this was where price was reacting from. Okay, they were selling from here. So by the time price was able to come here, all of the supply area here just broke through it. This was where the candle opened. This place was where the candle opened. This particular place, this was where the candle opened. So this open, this was the area where sellers were clustered at, and they sold down. By the time this one opened and this guy bought, he just took all of them out. And you see that price was trying to retest. This is how I build my POI. I see the reaction that happens around the particular candle I've been interested in. And I just pick it. So all of this reaction was happening. They were selling, they were selling. This one reacted from one kind of supply. This particular candle reacted from one kind of supply. And then they were still selling further, sold further, and then boom, it sold down. So by the time price came, took everything out, and then we were able to go up. Now see, they were still trying to sell again. But then this one is now telling us that there's enough demand there for all of you guys. So by the time they just tipped into it, they continue to buy. So that tells us that there's heavy demand there. That's why I will pick this candle. Just pick it from there and then buy continues. So we just keep on buying and buying and buying and buying. So yeah, there was internal liquidity prior to take this. See all of this reaction here. Buyers were weak. Buyers were weak. Are weak. The first sell came here again. We're not able to take this eye out. But they tapped into it and then they sold. So now we took internal liquidity into this candle, to this particular candle. So when they did that, we have enough liquidity for price to take out first. Price came, did that. Let's see, did it take it? Okay, it didn't fully take it, but we have enough confirmation that we are going to take it. So I think I took another entry here. That's no longer October. Another entry here because we've already swept here, tapped into here. This one bought. As of supply here that was occurring, people were selling here, and then this one swept, broke. This one there was another touch. Somebody sold from here. Then we had all of this accumulation that was occurring here, and this guy is trying to stop everybody. And then there was this sweep now. This one swept. This one tapped into it, and then we were able to take an idea. I took this entry on lower time frame though, so I'll show you later. And then there was this inducement there, and then we tapped into it, and then went up. Now sometimes you see that price will do something like this. Price will come all the way down like this. Just do this. And then you have this one sweep something. You see something here. Something will come here. And then another one will continue. Then we have this. So now where will be your entry here?
My entry will be this candle that.
Share this one
Yes.
or this one?
Oh, yes.
This one. Okay. You can put your entry there too. That will have been the exact right entry. So price will just go into it. Then continuation. So that was what happened here. Let's go to it. What day was this? 21st of October. It's 30 minutes. The 1st of October. There were even some other entries that were here. Okay, this was it. So price had already done all of the sloppy sell and all of that, and then the buyers came in full volume. And all of the retest, price touched into here. We came here. This was internal liquidity. Price came here, swept it. But if you look at this thing, normally I would have said that I would draw a discount premium. But this is where the discount premium was. This guy, this high, and this low. So when price came and touched into discount. Top here, this one became demand. There was internal illiquidity there too, because this guy was internal illiquidity, needed to be taken out. A full structure. There are sometimes that market structure might look like the only available option. Because in this case now, market structure is what we have. This low form this high. And then we now have internal illiquidity. That tells us that we have a full structure. That was why when price tapped into here, we bought from here. And somebody was very aggressive. They bought all the way from here, they bought here. So we had all of this reaction, all of these people trying to sell off, and then we tapped here. This one mitigating this demand that was here. And so when price went up, we were able to go, we were able to take out this high. This one is enough for me, for my own model. So as soon as it has taken this high, we were looking forward that okay, price will take this as another liquidity, then we tap into demand. We see none of the reaction here. That was enough. Let me see 30 minutes. Till 1 October. Yeah, it even makes more sense. Then this was where I took my entry. We were able to take it out liquidity, we tapped into it, then went. All of this happened, and the price came and swept this high. Next thing is, this one is not in liquidity because it was able to start the buy, went up here, swept this, and we haven't even touched into demand. All of this accumulation was here. Went up and then tapped. So whenever I see something like this, I'm usually very interested because this one to me now looks like a sweep. And then there was a tiny break here, and then we see all of this accumulation occurring here, and then we swept this high, and then next thing price comes, taps into here. So that was why I picked that entry. That was a long time ago. Does it look complicated?
No, I'm getting it.
Okay.
I'm getting it. It's a transfer demand. That's the beginning of your zone at the premium discount.
Mm.
When I was transferred then this yes, yes, that place. So from there now, we now have transfer demand. Yes, which is that place. And now I'm looking for kind of that place now. So I'm looking for a way for a high that would break. We're looking for liquidity.
Yeah.
Break of liquidity
You are looking for liquidity grab.
graph. Like
My model might not eventually be your model. I say you know. Because the way I see
that
my
mentality
things,
is a good part.
yeah. I was watching one video from NK this morning, Investor NK, and she was saying something. He said what your mentor is going to teach you. He said it's going to be a matter of you learn whatever the mentor teaches you, but the only way you can be able to grasp it properly is when you now take it and you go and study hard. That is when you now be able to understand properly what you have learned. Because at the end of the day, everybody will not have the same model. What I was taught is not exactly what I use because I just work with logic. I just work with logic. And what I was taught then was to work with logic. And I said that logic was better than pattern. Because if you follow pattern, you just enter bush. Sometimes you just be looking at your charts all day, all week, all months, and you might only maybe get one or two entries. So And I decided that okay, I'm just going to go ahead and study and all of that. And I began to see more and more things. Because when you backtest too, it also helps. When you backtest, there's a guy who sells by premium whatever premium trading view. So that's the guy I use. And then I've been buying premium accounts since for like over 7 to 8 months now. Over 7 to 8 months. And I did serious backtesting, beginning from I think I began from year 2008. I was backtesting one pair, took another pair, began backtesting from that. So that one, whenever I see how I'm behaving, how I'm doing on the chart, I learn where I made mistakes. So I will just like look at something that is familiar, and then I will say that okay, this is where I'm going to place my entry, and then I will see what happens next. So when I see what happens next, I'll know okay, is this thing good or not? That is when I see that okay, maybe price picked my entry and then went my way, or it did not. When it did not, I'm able to learn something from it that okay, this thing did not work because of this, because of that, because of that. So when I've seen that over and over and over again, it does not look like as if I'm doing magic sometimes to some people. It just be like, why did you pick an entry there? And the thing is, that is the way you build the experience. It's the way you build the experience because experience trumps knowledge a lot of times. Experience will give you the knowledge you need and how to apply that knowledge. Because the way you see it is not the way I see it. The way I see it is not the way you see it. And I've noticed that you have a kind of model that you use. So, and that works for you. So, it's just to build on it, to back test it, forward test it, even if you have to, and then just work with that, and that's that. So, price just kept going up from here, and then we tapped into this demand. Somebody was buying heavy from here. So we tapped into it, and the price went up into this candle. See how price was avoiding this candle like really bad. And the sales were weak and there. So this was the only candle holding. Been able to take this high. So price just tapped into it. Then the buy continued. Eventually price might even come and sweep the whole thing because so it's not a standard official entry or something. But good enough. There was accumulation that now started occurring around here. The sell candles that will have sold and taken out all of this low, they were this one. But somebody was gatekeeping this place. They were buying. So next thing you should expect is price to use this one as demand. She did. So I'm going to use this one candle. So use this one as demand. Because now this one looks like liquidity. We've been able to go up high like this. Take this and take that high there. But this one is in this month. We're going to go up and take this high. I haven't subscribed in a while, maybe like for over 2 months now. Because I don't feel like back testing at this. But I know that definitely I'm going to back test again next year for the sake of study. But there are going to be more and more studies. So we have been able to take this high. So we have inducement here. So price was coming to it and then continue buying. But when I tested here, so it was the candle that broke the supply that was here. This candle. So price had to come back into it and then the continuation happens. Possibility that price will take it. And it did. Because this one looks like liquidity. Let's took it and tapped into the same area of demand again. So buyers were weak here. Somebody bought here though, but they were still weak. We just can use this one as inducement, swept, tap into here. Send you. So we tapped into here and then we bought. So you see that we're not even able to take this high here. So price sold. We took this low, went up here, retested, order sell. So the sell was officially called here. Somebody was like, are we really selling? Just decided to buy. Everybody else followed. But by the time they got here, the people who are monitoring this level, they were like, no, we are not going to hold to that high. We've already gotten here, gotten here, gotten here. And next thing, let's just sell from here. We just sold. Off it went. So the accumulation began to occur here, the manipulation here, the liquidity grab. And then next thing, expect inducement, and then we came into here. This was a good entry. So price bought from there, then we bought here. Then we had an entry here. So continuation. Two entries, 1 year, 1 year. We tapped, were able to overcome the supply that was ranging around here. This one sold, they bought, they bought. The main reason why I took this entry was because of the fact that we had sold here. Then this guy bought. So as the candle that broke all of this supply that was here. And by the time this candle closed, this one opened without mitigating it fully. I went up and bought, and then they tried to sell again. This time around, they now sold this time, and they were able to take the of this one. It now looked like, oh, we have already fully mitigated this one, and now we can continue. But it was a lie. We are not fully mitigated this candle. We are not fully mitigated it. So by the time they bought, they had to come back again to come and retest that candle because it was holding heavy demand. You can see that the high it created, they had to start selling from there. Buyers were getting weak because they could not hold it. Normally, this should have been a pullback, but because of the fact that buyers were weak, they tried here again and they failed. I think I took this sell. I think I took it. So they were weak and then they sold from there. And then there was a sell that continued into demand. So all the way from there, we are still in October almost.
30 minutes. Okay.
Yeah, that's why. So we see this one. So this was an entry too. Just that I wouldn't have taken it by here because there was no obvious entry for me. All of this one. Normally I should have seen an entry with this one happening, but there was no entry for me here. This candle will not provide entry. All of these guys, nothing here showed. But they tapped into something which was here. You can see that they bought and they sold. They bought from here. This one opened without fully mitigating, sold down, bought, and then this one tapped, mitigated, sold down, and then this one no full mitigation, and then sold. So there was now further sell, and then they bought. So if I thought I was going to even say I wanted to take an entry, I would just say okay, let's just put the candle all the way here. Because of these ones that did not fully mitigate before they went. So if at all there was going to be an entry, this was the entry. Because what I can see here, I can see some of my model. I have the sweep, being able to sweep something here, then we grab the liquidity here. Next thing you should expect is a pullback, then we'll continue. So that will happen. Yeah, this is inducement or internal liquidity, sorry. Internal liquidity, but this one is not even internal liquidity because we are not even able to take this eye out. It's not internal liquidity, it's engineer liquidity. So it's engineer liquidity. And so we see that price even failed further and further to break structure to the upside. Buyers were getting weak again. So I just took out this eye and then the sell followed. This is an interesting pair actually. Then the sell.
It gives a good sell.
See?
It gives a good reward for sell.
It gives good indications of entry, of price action. So we understand the psychology of the people who are there, even before anything happens majorly. From here now we see this one happened. And then they bought. Then buyers were getting tired, they got tired. A small sell, got tired, they got tired, then exhaustion. So the next one that followed was the sell. I wouldn't have gotten an entry in any of this, but we saw what happened, sha. So price sold down. And then this one happened, this one bought, tapped into here, then sold, This look like a good entry, but one thing is for sure, it looks like liquidity. Because all of these ones were selling here, and then this area was protected. So if you now say you want to take a sell, see a sell from here. You just be on 50-50 that okay, oh, price might still come back here and then you continue because this one looks like a demand zone. Looks like a demand zone. The good thing was, you see that when price came, it almost even took out the high. So it was not a good sell. I don't are taking it ever. So we came, we broke it, we took it, we took all of this. This was telling us that demand was in the market by what followed. So we went up, tapped into here, this one came here, tap, and took this high. So the next thing is to expect that price to tap into this demand. Hope you are getting it. So we tap
Yes,
into
sir.
this demand.
Demand that. Yeah.
So we see this one sweep, break, test expected. So test coming to here and the buy of course. As Akuku know they trade more than 3 hours, I'm already out of this trade. Just tap here we buy. Further sell, whatever they want to do. Accumulation, manipulation, sell. Accumulation, it's manipulation, yeah. Retest, sell. Final accumulation, one small retest, sell. Sellers are getting tired already. So that's here. That is buyers here. You know that in all of this, I've not even used I've not used this kind of premium.
But you see that you were covering it in your mind. Why you taking it?
The thing is, I've noticed something there. It will get to a point in your point of trading. You don't even think of premium discount again because you already identify it and you know what is happening because of market structure. And what we base discount premium on is because of market structure. We have market structure because now there is nobody that can confuse me. I already know when there's a shift in market structure. I already know when there is about to be a shift even in market structure. So from here now we see all of this sell occur. This guy I bought from here. There was going to be a shift, but we needed to see the confirmation because it looked like this one was not going to be able to take this high because of the weak movement that we had here. So I was just, how do I explain it? Due to explain, sha. So if I had markets do like this, all of this movement, all of this accumulation, internal liquidity, do like this, tap into here, and then you see all of this. So price just tapped into here and continuation of course. So what we have here, price was not going to take this high. In fact, if I had seen this alone, despite the entry that I had here, seeing this alone, I would have known that price was not ready to take this high. Because the volume of buyers was not so obvious. It was not very, very obvious. Because they were not holding strong. If you want to see buyers buy, you see the way structure will appear like, you will know that this one is going to buy. Just like here now. Already from here, I know that there's no coming back. I know there's no coming back. Because now we've had accumulation occur now. And this is not small accumulation. See all of these ones happen. All of these big accumulation. Somebody tried to sell every year and then they bought. They were able to take out this level. Next thing, just expect price tap into here and then after I tapped, you buy and then somebody sold, taking their profit, tapped into here. The buy just continues. I don't think price ever came back again. It never did. So there are things that will give you signs that price is about to shift. Price is about to shift. And these are the things.
So what was
If
it
you study it
around
further, you see it, sir.
the time I was sure that we can fix them? Or was it around cancer bringing us no
No, it was around here. It was around here I knew that market was shifting for sure. Fully shifting.
So you wouldn't take trade or get to that point or
No, I'll take this now
certificate.
because my target is just 3 hours, and I know that okay, this is my model. But there are several things I understand when I get to the market. I understand the structure, I understand the movement, I understand the direction, I understand my model. My model is the one that will come last. My model is the one that will come last. So, you know, when I understand that okay, market is moving in a particular kind of direction, we've had all of the sales here. Let me just tell you what I'm seeing right now from this one. So, we've had price buy all the way from here, price has sold all the way down here, and then we see this. All of this slanty price action, it tells me that, okay, this one is internal liquidity. So, when we get here and we see that price begins to sell, there will have been maybe a sell entry here. We've had the sweep, price came all the way down, came here. No, if I had wanted to sell here, though, it would have been somewhere around here. And yeah, yes, this guy. Price came there, low top. This guy. Because what am I saying? The thing is, you see all of this reaction here. Been able to sweep this one. Price begins to sell from here. It's looking sloppy. And then this one comes here, taps into it, and then the sell continues. All of this one looking kind of, sideways kind of stuff. So by the time price came here, we had this one come here, manipulate, take out something here, and then it was the one that broke. So we now have price not mitigating fully before it sold down. Do you see that? We didn't fully mitigate this candle before we sold down. So next thing is to expect that price come and mitigate it and then sell down. So that was what price did. That was what price did. So what we become for is this low, which price did and came and swept this low. So if I had wanted to hold the long-term trading here, which I usually do on my personal account, which is not on proper account, I will trade 3 hours on a proper account and I can hold trades for longer if I see potential for longer term movements. I hold it on my personal account. So prop, just do your thing and get out. Take 2 or 3 trades, pass one challenge account and then move on to the next one. So that's just it. So price has been able to do that. Now one thing you see from here is that the weakness of buys. All of this came down here. Somebody bought from here and they managed to go to take out all of the supply and all of that. And this one was looking kind of how do I explain this? So we just had price tap into this, and then we had this low occur. Price just went that took this high. It was just impulse movement. So it was impulse movement, and price went high there. So we know that price is going to come back. Price took it, came into the demand because we've had somebody gatekeeping this area, as you can see from here, and it's in this can too. So price just had to come here. In fact, I could have taken an entry here if I wanted to. Just take an entry here, just because of the confirmation. And then the next thing will be because okay, this one has tapped into demand and is now holding demand. And we see that this one has mitigated it, took out some supply here, and then we've gone up, and then we created inducement, and we've been able to take this high. Why not take another sell, another buy? So it should be another entry. So that will just be the way it is. Should end this class soon. So if you just want to put discount premium, sorry, give me a minute. So if you just want to use discount premium in this kind of situation, you can put your discount premium from here to here. But one thing that I can realize from this pair is that let's always follow discount premium. I think I remember that about UJ. Let's always follow discount premium. So we might have to break it down. Even if you break it down, it's still not the same thing. Oh, it's okay. That's into it. Let me sub something. Then go there. So What UJ works with is liquidity. It doesn't really use discount premium. But on US 30 now, discount premium works really good. Discount premium works really good. Discount premium works really good. Most of these entries that I took here, they were some of the a large number of them were based on discount premium. Large number was based on discount premium. This one now. So we had already gone all the way. Yeah. Did this. Now I saw that price has been rejecting, buyers were getting to the market, they were protecting this area. I went up here. A small buy here, but it's not worth it really. It would have just been just to see what price does. Because what we are expecting is price to come into this zone to sell. So based on my strategy of 3 hour, just have been okay, let's just do this and do this. So now for discount premium, we just have to come here. These are discount premium here. Because now we begin to see that price has reacted. We saw some people selling all the way from here, but this one was protected. So all of the accumulation, it just came and broke. When we broke, next thing is to expect that price will test. So we are in discounts, yeah, and discounts. And then we've seen this candle do a little sweep here. We've come here, it came here, and it was not the one that really even broke. So it was not the one that really broke. But it went here, and then this one tapped into it and then went and did his business. So what was in my mind was that, okay, let's just pick the two. Let's pick some area of this and let's pick this one. So that was why I picked this, because I was seeing that the supply that was here, this was the sweep, this was the movement of price downward and then liquidity grab here. So we see that price was reacting from the supply here, and then price came here, reacted from the original supply and then sold down. So when price broke it, we see another reaction from this one. So this one already collected transfer supply and then price was able to break it. So now looking at it, this is it. Okay, so two confirmations. We had where supply was, so we have that zone covered, and then we now have where demand has begun to take control, which is here, which is here. So this was the first candle, was able to break through that area. So the second candle, by this mitigation alone, this one should have been enough for the entry. Do you get?
Yes, sir.
By this mitigation that this one did alone, this one should have been enough for the entry. Because while we have already mitigated it, there's no gap that tells us that, okay, it's not fully mitigated. So that's why I didn't have to drag my box to this level. Because we've already mitigated this candle by doing this. By understanding the pair too, I get that something like this too works. So price just came into this candle, into this area, and then continued the buy. You see that I did not take the low of the candle. It just came into it and tapped and used this one as amusement and bought. Placed my entry here and price just went up, went up, went up. So all this accumulation and then manipulated this. I see why. Manipulated this and then price went up there. So using discount premium, that's an entry. So by the time we broke, the next one will be like, where are we going to put our discount premium again? But one thing is for sure, by what we can see from here, there was going to be no discount premium because there is no point that we see that price is trying to pull back. So that tells us something, that price is probably going to have to retest later. And by the look of this, I see that this one is internal liquidity. Went up here, short buy upward, and then price began to do some little movement, sell and all of that. But you see the accumulation here, and you know that, okay, looks like price is not ready to come there yet. So then we see the break, we see all of this happen. This was the day that um what's the name of this CMC markets? Yeah, CMC markets. That was the day that their server had issue. It just went blank. So that was why this one happened. All of this. So buyers were not buying, sellers were not selling because the server was not working. Server was not working. So they couldn't get any information. Price was just frozen. That was why this one happened. But by the time they opened, you see that price just came for this gap. I just came here and bought. I didn't want to place an entry here because I was looking at the fact that maybe I not go do one kind of crazy manipulation when they open. I don't want to. I don't want to ignore the news that occurred. But one thing we can see from here, we had the sweep and the sweep, sweep and then had all of this tab. This one use this one liquidity. This one has this one went up. That's came here tapped into here. Then we had the break. So if there's anywhere we'll be looking to for demand is here. We just bought. But there was not enough supply, there was not enough demand. All of the fight that was occurring here, people just started taking their profits. So the sell occurred. So if you were to say you want to have your discount premium here, it's not bad. You could draw it from here. It's easier to draw discount premium on US30 than some other pairs like UG. You have your discount premium. And let's put this one as entry. So this one though, there's no way I would have done my discount premium here because there's nothing here. There's nothing here. But if I had drawn it, just be like this too. That's what price does. Usually when there's no place that can be an entry for me, I don't like to draw discount premium. But if you want to, you can draw discount premium. Sometimes drawing discount premium to can help you identify the exact buy zone. Just like one trade here that I was looking at, I was just like seeing two entries. This last week, I think. Are you with me?
Yes, sir.
I was just like seeing two entries and I'd be like, where am I going to place my entry? Where is it again? It was this one. It was this one. So I had to like draw the premium discount to be able to get the exact entry. I wasn't getting the entry. I was seeing almost like two entries. I saw that price. I had created some kind of gap here. But the thing was this one mitigated, but it not mitigated properly. I was like, okay, should I place my entry here on this candle here, or I should place my entry around here because the price action has pointed to this area as entry. So we've been able to sweep here. All of the supply that was here, we were able to break through it. This one tapped into it and mitigated. This one reacted from heavy supply and still closed bullish, and then we bought. So we bought, and then the next thing that happened was sellers trying to sell from here. Yet it's still too strong, and then the next one mitigated and bought. So when I used my premium discount, I saw that okay, we can't use this place as entry. And by the looks of things, we saw that there was a supply that price was reacting from here. People are selling from this area real bad. We are selling from here real bad, and then by the time price broke through it, you expect that that should be the zone of entry. So I just put it here. By the time price came, this one was inducement. Getting on to past 1 hour. I need to discuss. No, by the time price came, it just came into it, and then the movement continued upward. So far, that's what we have. So the next one was when price came in. It had some accumulation, then drop, and then when price came, took it out. There was reaction, price sold, the boards, they sold again. There was no mitigation, and the price continued. So automatically we picked this country. So the next one that was it. So some people were taken out of their trees because of this thing. They didn't pay attention to this place. I saw some people who are placing their entries. They were placing their entry here. They be like, okay, now This is where price is going to be buying from. Felt like this was a sweep. It felt like this was a break, and then they put their entries in this area. Or experience has taught me that when I see formation like this, it is a trap. It is a trap because the reaction was here. This candle just broke like this. Whenever I see this kind of these three candles, I know that I know it's a trap. Just a trap. So they bought here. By the time price was going to do his thing, just came here and took all of them out. SLs just were screaming like SLs up and down. It's hard to mitigate here. You have to pay attention to that because this is where price started from. And one thing you should note is whenever you want to take a trade, you look at where price is coming from, where price is going, and where price is right now. So when we look at where price has come from, we saw that price was coming from here. Look at where price is going. You see that price is coming for this high first, and then to continue. See where price is at. Price is here. Accumulation. We wait for manipulation, and then this is manipulation. This is where price was coming from. I say that okay, there was still demand here to be mitigated, which was somebody's order. It was New York session though. And the good thing is, I saw this one the night that I took this trade. The night that I took this trade, I saw that okay, price had done this. We are going here. This was 12 o'clock. Before the open of the next day, I already saw this place. And I had already marked it out that okay, this place should be a good entry for a buy. But I saw that it was in the night and I can't place my entry in the night because it's not my trading hours. So I just left it. I said, okay, let's see if price is going to mitigate it during Asian session or not. So when I woke up in the morning, I just saw that price has not mitigated it. I said that's a good thing. We just saw the accumulation. I said that okay, that would be a good place to place an entry. So they were waiting for New York to come and mitigate their order and continue to buy. Because it was New York that created this. New York created this kind. So it was New York too that mitigated it. It was 330. So they mitigated it and they continued their buy to the upside. So that was it. That was it. And then we had this sale. So if buyers are serious about buying, although I don't expect this to happen for long, it might happen like this and then a little buy here, and then eventually we'll come and take this low as liquidity. So just want to take this low as liquidity. So it'll be internal liquidity if they want to continue to buy. So it will just be a short buy to the upside, and then we sell downward. Take this as internal liquidity, see where it goes. So that's the expectation. That's the expectation. I hope I didn't confuse you.
Because I know you this great study to know better and know how to listen.
Yeah, study will help you a lot.
Information, manipulation, and instruction
Yeah.
is one foundation that I will hold on to.
Yeah. Let me just end this session here so that I can explain something.